ever get that feeling? You know, you've got something really promising, maybe an idea or an investment that looks great on paper,
Yeah.
but actually turning that potential into, well, real results. That feels like the hard part.
It often is. And that's kind of what we're digging into today, specifically with investing.
Exactly. We've got, I think, a really compelling case study. It's focused on one particular company, a dynamic one, and using a really sort of intelligent platform to analyze its performance.
Right. And we're not just, looking at the buzz around a company. We're trying to get under the hood, look at its actual investment performance using this analytical platform called Laze Q.
Laze Q. Okay.
Think of it as a deep dive, really, into Monday.com, that's MNDY, and how this data first view can maybe show you things you wouldn't normally see about its potential as an investment.
Okay. And for anyone maybe less familiar, Monday.com, they're in that software as a service space, right? High growth, changing how teams work.
That's them.
But like you said, this isn't just a company profile. The goal today is really to understand what makes Monday.com interesting to look at investment-wise.
Right.
And maybe more importantly, how a platform like Laze Q gives these unique perspectives, helping you cut through all the noise and feel genuinely informed without being totally overwhelmed.
Yeah, that's the aim. So maybe let's start with Monday.com itself. Get a feel for the company.
Good idea.
They're not brand new. Founded back in 2012, Tel Aviv. They were actually called Daypulse initially.
Oh, Daypulse, right. I remember that name.
Yeah, they rebranded in 2017 to Monday.com. And the vision behind it was pretty interesting. Make work management efficient, sure, but also maybe even positive, enjoyable.
A lofty goal for work software.
Yep.
And they've built quite a platform around it, haven't they? The work operating system or work OS.
That's the core, yeah. It's this flexible SaaS platform. And it's got serious traction, over 200,000 teams using it now.
Oh.
And that includes some really big players.
Yeah.
Coca-Cola, Canva, HubSpot. They're all customers.
So it's not just small teams. And they have specific products too, right? Beyond the main OS.
They do. They've branched out. There's Monday Sales CRM, Monday Dev for tech teams, Monday Marketer.
Okay.
Plus tools like WorkDocs for collaboration, Workforms for data gathering, and these customizable dashboards to see everything.
And integrations must be crucial too. Does it connect well with other tools people use?
Yeah, that's a big piece. Think about what teams already use: Slack, Jira, Salesforce.
The usual suspects.
Exactly. Monday.com integrates pretty seamlessly with those. It makes for a much smoother digital workspace, which is, a big selling point when you're adopting something new.
Definitely reduces the friction. Okay, so the platform sounds robust. What about the financials? How are they looking recently?
Pretty strong, actually. If you look at Q1 2025, revenue was $204.3 million.
Okay.
Which is up 33% compared to Q1 the previous year. So solid growth.
33% year over year. That's quite significant.
It is. And their non-GAAP net income was $48.9 million for the quarter.
Non-GAAP. So that's looking at ongoing operational profit, kind of stripping out some one-offs.
Basically, yeah. Gives you a clearer picture sometimes. And they generated good cash, too, $76.8 million in free cash flow. That's the cash left over after running the business and reinvesting.
Healthy numbers. And are they optimistic about the future? What's their guidance like?
Yeah, they seem quite positive. They actually raised their forecast for the full year, 2025.
Oh, really?
They're now expecting revenue somewhere between $894 million and $898 million. And they bumped up their non-GAAP operating income guidance to $133 million.
Okay, so they expect this momentum to keep going.
Looks like it.
Yeah.
So if you put it all together, Monday.com is really a high-growth leader in SaaS. And they're pushing more into bigger enterprise clients, adding AI for workflow automation. Seems like they're positioning well.
Right. So a solid company, strong growth story. But now the interesting part, how does Laze Q look at this from an investment angle? Tell us more about Laze Q itself. What is it?
So Laze Q, the name stands for Liberated Algorithmic Driven Zero Effort Investing. The idea is to make algorithmic investing more accessible.
Algorithmic. So using computer programs and data.
Exactly. Taking emotion out, using data analysis, algorithms, quantitative intelligence, multidimensional stuff, and even machine learning overlays to make investment decisions. And a key thing about Laze Q is it doesn't just buy into the hype or potential. It actually rigorously tests that potential using historical data, market trends, all of that.
Rigorous testing. I like the sound of that. So how did Monday.com fare under this testing? Let's start simple. What if you just bought and held the stock? during the test period Laze Q looked at?
Okay, so for the specific period Laze Q analyzed, a simple buy and hold strategy from Monday.com would have given you a return of plus 35.47%.
35.47%. Okay, that's a solid return, right? Reflects the company's strength we just talked about.
It's respectable, yeah. Definitely shows the underlying business was doing well and the stock generally trended up.
But I sense there's a but coming. What happened when Laze Q applied its machine learning layer?
Ah, yes. This is where things get really interesting. When the ML layer got involved, and this layer learns from tons of past price action, macro signals, momentum shifts, the return jumped significantly. We're talking plus 176.01%.
Whoa, 176% compared to 35.
Right.
That's a massive difference.
It really is a substantial outperformance compared to just holding on.
So what's driving that? Is it just about picking the absolute perfect buy and sell points, or is it more nuanced?
It's more about refined execution. The machine learning helps identify trading opportunities that have higher probability of success based on all that historical data and the current market context.
So not chasing every little up and down.
Exactly. It's not about predicting every wiggle. It's about finding those more reliable moments, those higher probability trades. And the key thing really is that it's driven by data and algorithms. It takes the guesswork out, or at least tries to minimize it significantly.
Okay, that makes sense. So Laze Q isn't just saying good company, it's actively trying to capitalize on the how and when of its stock movements. Let's break down that winning strategy a bit. What technical signals was Laze Q picking up on during this period?
Well, there were several indicators that consistently pointed towards bullish strength for Monday.com during the analysis window.
Like what?
For one, the stock price showed strong support above all the major moving averages, the 10-day, 20-day, 50-day, all the way up to the 200-day.
It's staying above those averages, generally a good sign of an uptrend, right?
Generally, yes. It indicates solid underlying support. And then you had other indicators lining up too.
Such as?
Things like the TTM squeeze and TTM impulse indicators. These were consistently flashing buy signals.
Yeah.
They basically suggest strong momentum building up.
Okay.
Plus the RSI, the Relative Strength Index, which kind of measures the speed and change of price movements.
Yeah.
It was frequently up above 70.
And above 70 on the RSI often means strong buying pressure, maybe even overbought, but in this context, sustained strength.
Exactly. Sustained bullish strength. We also saw MNDY divergence that favored the bulls. The MACD compares different moving averages, and this divergence can signal that momentum is shifting upwards, even if the price hasn't fully caught up yet. It confirms trend-following trades.
Got it. So, a confluence of factors, not just one signal in isolation. How did the Laze Q system actually use these signals? Did it trade constantly?
No, not necessarily. The strategy seemed focused on higher probability trades. It wasn't trying to catch every single swing. A big part of it is capital preservation, especially when the market gets choppy or goes sideways.
Right, avoiding unnecessary risk during consolidation.
Precisely. The system aimed to get in when there was strong, confirmed momentum, backed by those technicals we just discussed.
Can you give us any concrete examples, like times it avoided drops or caught good entry points?
Sure. So looking at the period, the system seemed to navigate around some significant drawdowns. Yeah. For instance, there was a drop from about $324 down to $246.
Oh.
Yeah. Instead of riding that all the way down, the algorithms likely picked up on weakening signals and pulled back. But on the flip side, it identified what looked like reaccumulation zones.
Reaccumulation, where buyers step back in after a pause.
Kind of, yeah. Areas where the stock seemed to be gathering steam again before another potential move up. We saw this near the $264 level and again around $289.
Okay.
And another thing, it looked at volume during breakouts using something called Delta ROI, which tracks the change in return alongside trading volume. It could help confirm if a breakout move had real conviction behind it.
Interesting. So it's looking for volume confirmation on those key moves. It really sounds like a selective strategic approach focusing on quality over quantity of trades.
That seems to be the idea. High conviction opportunities.
So let's bring this back to the listener. We've seen Monday.com is a strong company, but we've also seen how Laze Q achieved much higher returns by trading it algorithmically. What's the big takeaway here for someone trying to manage their own investments?
I think the crucial thing to remember is that even with a fundamentally sound company like Monday.com, the market itself is complex. Well, complex. It's volatile. You've got competition, macro events, sentiment shifts, all sorts of things impacting the price day to day.
Yeah, it's never just about the company in isolation.
Exactly. And that inherent volatility makes it tough, even for really savvy investors, to consistently make the best decisions at the right time.
And that's where something like Laze Q comes in, trying to add that discipline.
That's the goal, yeah. It brings discipline and automation to the table, which can be huge in navigating those complexities. It analyzes the potential, sure, but then it uses these adaptive algorithms to try and amplify those potential returns through smarter execution.
And the machine learning adds another layer on top of that.
Right. It brings that ML augmented intelligence for potentially smarter, data-driven decisions, constantly learning from market behavior.
And you mentioned zero effort in the name. Does that mean it actually handles the trading too?
Yes, that's a key part of the proposition. Automated execution. The system does the buying and selling based on its signals.
Which frees up your time, obviously.
It frees up your time, and importantly, it takes the emotion out of it.
Yeah.
Fear, greed, those things that can really trip up manual traders.
The classic behavioral pitfalls.
Exactly. So the core idea, the value proposition, is aiming for what you might call peace of mind investing. It's about accessing these potentially sophisticated quantitative strategies.
Getting that quant alpha.
Right. Potentially tapping into that without needing to constantly watch the screen, second guess every move, or manually place every trade.
Okay, that makes a lot of sense. So let's just quickly recap. We dove into Monday.com, impressive growth, strong position.
Definitely.
But we also saw how applying Laze Q's quantitative intelligence, its algorithms, and ML resulted in significantly better performance compared to just buying and holding over that test period.
That's right. It highlights how a data-driven algorithmic approach aims to go beyond just picking good companies. It actively tries to optimize the timing and execution within the market's dynamics.
And this won't be our last look at this kind of analysis. We're planning to do another deep dive soon, looking at a different stock through the same data-driven lens.
Looking forward to it.
So maybe a final thought for you, the listener. As you think about your own approach to investing, how might incorporating some level of intelligent automation change things for you?
Yeah, it's worth considering. How could it reshape how you understand the markets, how you navigate them? Maybe it's time to explore, the potential of algorithmic investing, platforms like Laze Q, and see if that kind of approach might fit into your own strategy.